So in today's video, we are going to discuss about audit assertions and audit procedures. Okay. So let me give you one example. So consider inventory. So to verify inventory, what is the procedure you choose? So say for example, visualize a situation where you are conducting audit of a client. So you went to client's premises. So in the balance sheet of client, they have written inventory, say 10 lakhs. In the balance sheet of your client, there is one item, inventory 10 lakhs. So how will you verify inventory? How will you verify this 10 lakhs? So try to understand how many angles of verification is there, how many parameters, how many assertions, how many questions you need to answer. So let us see what are the probable misstatements. So there are many ways inventory could be materially misstated. Inventory could be materially misstated. What are various ways in which inventory can be materially misstated? 1. Items might not be counted. Items might not be counted and therefore not included in the balance. And therefore not included. Can I say this leads to omission? Can I say this leads to omission? Yes. So items might not be counted. Physically items might not be counted and therefore they are not included in the inventory balance. This could be one probable misstatement. Second one could be items delivered. Items delivered after the year end. After the year end could be included in this accounting period. Could be included in this accounting period. This can be second misstatement. This can be second way in which a misstatement in inventory is happening. 3. Damaged or obsolete stock. Damaged or obsolete stock might not be valued at the lower of cost or NRV. 4. Purchase costs might not be recorded accurately. And there could be many more points also, like your inventory lying with third party is not included. Say for example, inventory lying with third party without sale. For example, consignment, something like consignment are not included in closing stock. So try to understand when you are specifically thinking about inventory, how many ways are there? How many ways are there in which inventory can be materially misstated? First one is items might not be counted and therefore not included. Items might not be counted and therefore not included. Second one is items delivered after the year end. That means, see, I'll give you one example for the second one. So this is your timeline. This is 31/3/2020. So you ordered inventory here, but you received inventory here. So inventory ordered, that means purchase order placed before the closing of the year, but goods received after the year. Usually, when can you record purchases or sales? If you remember your Sale of Goods Act, or if you remember your Accounting Standard 9 revenue recognition, or even IFRS 15, revenue from contract with customers, or Ind AS 15, all these accounting standards, all these legal provisions speak about same thing. if the ownership in the goods is transferred, if the risks and rewards associated with the ownership are transferred, then only the sale is complete. Otherwise, do not take it. So simply because you paid advance or simply because you have given one purchase order, you cannot record inventory. You cannot record purchase transaction. So if you are, recording that in this year, it is a very big mistake. So here what we do, here we need to apply cutoff procedures. Here we need to apply cutoff procedures. This is one. Then the next one, third one is damaged or obsolete stock might not be valued at lower of cost or NRV. Here physical verification helps. When you physically verify, then you can see, oh, this is damaged stock, this is non-moving stock, this is slow-moving stock. So a provision should be created or inventory value should be written down, cost or NRV, whichever is lower, calculation of net realizable value, all these things will come into the picture. Then purchase cost might not be recorded accurately. Accounting standard 2, whether Indian Accounting Standard 2 or Ind AS 2 or even IAS 2, inventory valuation, if you observe, when you purchase inventory, that purchase price will be there, no? Purchase cost. So to this purchase cost, you need to add incidental expenses like freight, like insurance or loading charges, unloading charges, or sometimes customs duty when you are importing materials and all, octroi, okay, or toll gates paid, all these kind of incidental expenses which are directly attributable to the inventory purchase are to be added. So maybe you have purchased goods, but the incidental expenses are not properly included in inventory valuation. So this is about valuation. This is about valuation. So applicability of the accounting standards, compliance with the accounting standards are to be verified. So this can be done by scrutinizing, by inspection of invoices. By inspection of invoices or purchase orders. When you take this, invoice file, and when you see whether the incidental expenses are properly capitalized, that means added to the value of inventory, or no, you have to verify that. Then the fifth one is inventory lying with third party without sale are not included. For example, classic example for fifth one could be consignment sale. Fifth one could be consignment sale. So you need to verify the goods sent register. You need to verify goods dispatched register, goods received register. So whether any of the stock belonging to the other person is there in our godown, or whether any of my company stock is there in another person's possession. So goods sent, but property is not yet transferred. For example, you are a company, you are consignor, you have sent goods to consignee. You are from Kashmir and there is one guy in Kanyakumari, you have sent goods to him. But till the time the goods are sold to third party, till that moment the stock should be included in your closing stock only. That goods are to be included in your closing stock only. So what you have understood from this whole example, so even when one item like inventory is to be verified, that cannot be verified using one auditing technique, that cannot be verified using one audit procedure. That is the reason your standard on auditing 500 says there are so many audit procedures, there are so many audit techniques. So basically the procedures to obtain audit evidence are broadly categorized into compliance procedures, substantive procedures. Compliance procedures deals with tests of controls, and substantive procedures are again tests of details of transactions and analytical review procedures. So audit procedures, what are these audit procedures? Audit procedures. So this audit procedures have to deal with, they have something to do with sources of audit evidence. Sources of audit evidence. There are two main sources. What are they? One is tests of control. Tests of control. We also call this as compliance procedures. Compliance procedures. And second one is substantive procedures. Second one is substantive procedures. Substantive procedures are again classified into two. One is tests of details. and the second one is analytical review procedures. Tests of details and analytical review procedures. Now, what is this tests of control? This is nothing but evaluation of internal control systems. So what are we evaluating here? We are verifying, the auditor verifies whether the internal control system is A, existing, B, adequate, C, operating effectively. In tests of details, again there are two categories. One is tests of transactions. Next one is tests of balances. Tests of transactions is known as vouching. Tests of transactions is known as vouching. We call it vouching. Tests of balances, we call it verification. Tests of transactions is called vouching. Tests of balances is called verification. So what are various sources to obtain audit evidence? There are broadly two sources. One is tests of controls, whether the internal controls are existing in this particular department, in this particular organization, in this particular division, in this particular transaction. So you have to verify whether the controls are existing. Namesake controls are not enough. Namesake controls are not enough. We need controls which are commensurate to the nature of the business and size of the client's business. So it should be an adequate control, whether the control is adequate in the given situation or no. Otherwise, it leads to control breakdown. Ineffective controls, defective controls, weak controls cannot, prevent or detect frauds and errors. So you need to have solid controls. You need to have solid controls, and also whether the controls are operating effectively or no. If you can recollect, even as per your Companies Act 2013, or if you are doing any course like USCPA or CMA USA, SOX compliance, or in India, Indian Companies Act, or even in UK also Companies Act, they speak about the auditor's certificate about this operating effectiveness of internal financial reporting controls. So the first thing you do is whether the controls are existing, whether the controls are adequate to the given situation, whether the controls are operating effectively. Then based on your degree of satisfaction about the tests of controls, then you go to substantive procedures. For example, this analytical review procedures are there. No, analytical review procedures are nothing but ratio analysis. You calculate the relationship between two items, like it could be your occupancy ratio or it could be your gross profit ratio. So you are trying to construct relationship between two parameters. So what is the gross profit ratio of 2019? What is the gross profit ratio of 2020? So you compare them. And in the comparison, whether there are any abnormal deviations. So try to understand one thing. This tests of details are there, no? It evaluates one transaction or one balance, one single individual item. This ERP is there, no? You are thinking of the class of transactions or class of balances. So if you are thinking of the total debtors, that means you are doing something ARP. If you are thinking about we sold goods to Y Limited, about Y Limited, if you are doing something, some audit procedure if you are applying, then it is tests of details. So remember one rule, unless controls are strong, you cannot go to analytical review procedures. Unless controls are strong, you cannot go to analytical review procedures. Unless controls are strong, you cannot even go for audit sampling also in some cases. So your substantive procedures, it is as simple as this. Your substantive procedures depend on the existence, adequacy and operating effectiveness of your compliance procedures. So, my dear friends, we are discussing about audit assertions, and in that I have taken one inventory example and I explained you that one particular transaction or account balance should be evaluated in various ways, in various angles. So there you need to apply so many audit procedures and you need to apply so many auditing techniques. So after that I have explained you what are the sources of obtaining audit evidence. So I have introduced you these tests of controls and substantive procedures, but this standard on auditing SCA 500, whether it is Indian SA 500 or International International Standard on Auditing 500, both of them are substantially same. So whether you are thinking of SA 500 or ISA 500, it is huge, it is vast. Both from theory point of view it is vast, and from practice point of view also you should understand each and every nook and corner of this particular standard. Otherwise there is no essence of going for trainings or conducting audits. So you should know it thoroughly. So this is it in this video, and in the continuing video, this is my third video about this audit assertions, and about this stress of controls and substantive procedures I'll explain in detail in the next video. And also, if you remember, this inspection, observation, inquiry, computation, all these things are there, external confirmations and all these 7 auditing techniques, that also I will explain in the next video. So thanks for watching CAP classes. Please do suggest these beautiful videos to your friends also, those who are not attending coaching from remote places, or those who want more conceptual clarity and who are writing the examinations. They will be benefited with this. If you have any doubts, please type it in the comment section. Please do subscribe and share the videos with your friends. Thank you so much.